Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, December 10th. Mixed, rather quiet trade here overnight ahead of today's USDA WASI report at 11 o'clock Central Standard Time. Wheat prices now are about 2 to 3 lower. Corn is steady to about a penny lower, and in the bean complex, prices are 2 to 3 higher in the beans. Meal is about $1 or $2 higher, while bean oil prices have backed off about 60 points. Bean oil is being pressured by about a 3% drop in Malaysian palm oil prices overnight. Malaysian palm oil production in the month of November at 1.62 million metric tons. That was below expectations. However, exports were also a little bit light, leaving ending stocks at 1.84 million metric tons, which was above expectations. Also out overnight, Chinese customs data did show that they imported 7.15 million metric tons of soybeans in the month of November. That from all sources. Well, this was down nearly 10% from November of a year ago. Cumulative exports for 2024, they've reached just over 97 million metric tons, up 9.5% from a year ago. China also lowered their corn production forecast 3.2 million metric tons to 293.4. This due to excessive rains across key growing areas. In South America, weather-wise just remains mostly favorable. However, some areas in southern Brazil have had too much rain here as of late, leading to localized flooding. Net drying this week across much of Argentina. However, temperatures do remain seasonally mild and overall conditions favorable as they have entered into the second half of their planting cycle. We've seen no change to the USDA ending stocks forecast today for soybeans or wheat, remaining at 470 million and 815 million bushels respectively. The USDA has left the soybean balance sheet unchanged the last 3 years and in 7 of the last 10 in the December WASI report, so we see no changes there. All eyes today will be on, at least in the soy complex, will be on how the USDA handles the bean oil usage. I suspect exports will be at least doubled from the current estimate of 600 million pounds. So far, commitments have already exceeded over 900 million pounds less than 3 months into the 24-25 marketing year. This should result in a significant cut to usage for biofuel production, given all the uncertainty surrounding mandates and tax credits with the incoming Trump administration. And despite the pullback here in palm oil prices here overnight, bean oil does remain at a significant discount to the competitive vegetable oil. In corn, I've got ending stocks slipping 75 million bushels to 1.863 billion. This due to higher demand for exports and production of ethanol. And this happens to be at the low end of the range of estimates, where the average guess is looking for about a 30 million bushel cut. Overall, corn just remains stuck in a 420 to 450 range. Jan beans yesterday did reject its first trade over $10 for the first time in 3 weeks, falling back into the $9.75 to $10 range. With South American weather largely favorable, to me, the path of least resistance remains to the downside. I do look for prices to drift back to the 935 level, a low here on the spot chart late this past summer. Bean oil currently consolidating near its 100-day moving average at 42.36, and I do continue to expect bean oil to outperform meal. Meal, I think, will drift back to the 2020 low near 280. In wheat, Jordan did pass on their recent tender here overnight. Overall, prices have not been able to generate much bounce off the recent lows, as we still lack a spark to ignite a short covering rebound. So USDA at 11 o'clock today. Thank you for listening, everyone, and I hope you have a great day.